I can guarantee you this is going to be the most insightful lecture that you've ever watched, especially in the niche of time, right? And this is also going to be one of the most advanced lectures that I've ever posted. So, what you can see right here is a tweet I posted on August 14th, 2025, okay? August 14th, so at the time of this tweet, I think it was this high or this candle just before the high. Somewhere around here was August 14th. As you can see, August starts around here. This is somewhere around here is August 14th. That's the time of the tweet. Okay, this is the daily chart of Bitcoin. And as you can see here, this can't be fake. This is on Twitter. You can go back and see it, right? It's all there. It's all there for you to see. Okay. If you've got positions in crypto, I recommend taking partials before the 6th of October. And then down here I put the end is near. Okay. Now, of course, without just completely giving it away, I am pleading people to, just before the 6th of October, take a little bit of money out, you know, secure a little bit of profit. And I'm warning you of something that is coming. It's big, right? I'm warning you of a pretty big potential high formation, okay? Now, something I want you to note is that this is 2 months in advance of the high formation, right? Now, as you can see, right here, I've annotated the 6th of October, and this is exactly the date of the all-time high of Bitcoin, right? Bitcoin being the largest crypto asset, that is exactly the date of the high here. Now, ever since that high, we have seen a 35% drop since all-time highs. Now, I'm going to walk you through here exactly how I called this date, how I knew this high was going to form, and also how I called the nearly to the exact around $100 or so the low of this right here as well. Okay, and all of this is available on Twitter for you to watch and see, right? It can't be edited, it can't be changed, none of that, right? All of this is in advance, no hindsight, right? All of this is live before the fact, and I'm putting it all out on Twitter for free. You don't have to pay anything, nothing, okay? So inside this lecture, I'm going to walk you through exactly how I timed this high and how I knew a high was going to form on that day here. Okay? Now again, a lot of the things I'm going to be talking about are under NDA, so I might need to hide a little bit of content here. However, I'm going to share as much as physically possible with you guys so you can be able to time markets just as I am doing here, right? And that's a missing key factor for most of the people watching this lecture. They know a lot about time, a lot of time, even too much about price, right? Most people know a bit too much about price and they can get confused about things. And they are missing the biggest piece of the pie, which is time. Time can invalidate all of your sort of price-based patterns just by adding 1 or 2 elements of time. Now I'm going to show you exactly how I timed this high. Okay, so the chart that you're looking at the moment is the daily chart of Bitcoin, okay? Now, as you can see, we made our bear market lows during, the start of 2023, right? November 2022. This is where the bear market lows got formed right here, okay? So 21st of November, the bear market lows got formed. Now, ever since that time, we have seen a ginormous run higher. Okay. Now, this is where we start to get to the good part here, okay? How did I time these highs? And how was I watching price as we were getting to this point to understand that there's a pretty high chance of a bear market unfolding? Okay. So, first thing I want you to keep in mind here, okay, is these major consolidations and these previous major drops. Okay. Now, look at what I'm about to show you here. And a lot of people, I feel, are overlooking this, and they already think the bear market's over. I personally think the bear market is in, right? I personally think the bear market has started. Again, this is no financial advice, But this is still a possibility that there's a chance that we recover from this, and we do see another high formation. And if we will see another high formation, then of course I'm going to be telling you the time and date that that high is going to form. Now the reason I'm saying this is because let's take a look at all of these previous major drops here inside of this bull cycle here. Okay. Inside this whole parabolic run, if we take the high of this drop here, this large retracement, okay, we retrace around 35%, right? So 30 to 35% is usually the amount that we retrace, right? Here, 33%. Now let's see how much we retraced here. Okay, oops, let's take it from the high here, 1 second. So from this high here, as you can see again, we retraced inside of that sort of 30% window, right? So here we retraced nearly 32%. Okay. Now these highs. Let's take this high that again got formed on October 6th. As you can see, I'm not making anything up. You can go look at the Bitcoin chart if you want. We have saw a 35 to 36% drop here. Okay. So again, all of these are just major retracements. This right here is nothing new. Did it form a little bit faster than all these previous ones? Yes. But does that mean that you have to be extremely careful? Also, yes. Right? But does that mean that does that mean that the bull market's over? No. Not just that one thing. Right? There are a lot of factors pointing to the fact that a bull market could be over and the start of a bear market is starting to unfold here. Now, I'm going to talk over specific timings here and how I've managed to anticipate the formation of this high. Okay. Now, as I said, a lot of things are under NDA and only my mentorship students know the things that I'm properly using here. I'm only giving you the tip of the iceberg. Now, if you want to be using things on intraday charts and larger time frames even, right? For swing trading, scalping, intraday trading, doesn't matter how you trade. I teach you exactly how I managed to time these swing points to the exact candle days, hours, months in advance inside my DLS mentorship. Now, again, that does have to have you sign an NDA, of course, because this is extremely lucrative information and it can be extremely dangerous. But once you know these things, you'll never see the world the same ever again. Okay? So, let's take a look at these runs that we were seeing higher here. Okay? Because these price legs here, from this low to this high, from this low to this high, right? From this retracement low to the all-time high. From the retracement low to that current all-time high. Okay? The period of time that those were seen, they were all predetermined time targets, right? They were all made at specific times for a specific reason, okay? Now, all your job is to figure out what those times are going to be in advance, okay? Of course, right? So, what I'm about to show you here is going to be really quite cool, okay? You're going to start to see how these are all algorithms just playing over and over again with very specific numbers, okay? And these numbers aren't completely random, okay? Now, let's take a look at this. We're going to take our date range tool, okay? I'm going to drag it from this retracement low to that current all-time high, right? So from retracement low to that all-time high at that time, okay? We get 168, okay? That number doesn't really ring any bells. It's fine, right? Whatever. Let's take the next retracement. Here to here, okay? We get 182, okay? Again, nice number, okay? However, these numbers do have very, very important meanings, okay? And both of those numbers are actually related to time in another factor, okay? In another way. So look, okay? Let me actually pull up a calculator to show you this. 168. Where does 168 come from? Because at the moment it just seems a completely random number, right? Look. 168 is a pretty important number because watch. The amount of hours in a week is 168. Within one whole week, you have 168 hours within there. Okay? 7 times 24. You got 7 days in a week, 24 hours per day. You get 168. Now convert this, okay? You can now convert this to seconds, minutes, hours, days, months. And the decimal doesn't exist, okay? Any decimals that you see in price is a phantom decimal. That thing can be moved around however you want it. So this can be 16.8, it could be 1.6, right? So how this number comes into the world, how it comes into existence, if it comes in a decimal form, if it doesn't come in a decimal form, it doesn't matter. That decimal can be moved around to any point in that number, okay? So we can change this to 1.6, 16.8, okay, 168. You can add a 0 onto the end, okay? Again, zeros don't really exist. Okay. Now, let's take a look at this now. 182. Now, this one might be a little bit more obvious to you guys. However, where does the number 182 come from? Okay. All we're going to do is take 365. Oh, sorry, 365. Typed in a little bit wrong there. And we're going to divide this by 2. And we get 182. Now remember, this is a phantom decimal. We can remove the numbers after the decimal. We can include the numbers after the decimal. Okay, we can shift the decimal to the left, right. Doesn't matter. Okay, the decimal isn't really real. It just sort of moves around, floats around however it wants to. Now, this is an exact half-year cycle. Okay, from this low to this high is an exact half-a-year cycle. Now, all of this can be predetermined, okay? You can find averages of both time and price with these time cycles, okay? Because these are basically just time cycles, okay? All it's doing is we are moving from this low and we have timed the next high. And within this specific time cycle, you have smaller time cycles within that. And within those time cycles, again, you have the more fractal cycles within that as well, right? So within all of these, you have even more fractal cycles. And within all those fractal cycles, this is how you're going to get this high, this low, this high, this low, this high, this low, high, low, high, low, high, low, okay? So from the larger cycles, you can figure out the fractal cycles, okay? And these lows will be spinning out highs in the future. And these highs will be spinning out lows in the future. Okay? So I hope that's sort of starting to make sense, sort of click into place. How these numbers that you see, doesn't matter if it's length and time, amount of bars, amount of days, amount of weeks, seconds, months, hours, okay? There are specific mathematical sequences and there are specific mathematical days. Okay, I mean the chance of it just falling on these specific numbers. Like, why is it not 183 bars? Why is it not 169 bars? Okay, because that would completely throw it off, right? If it's 169 bars, it wouldn't be the amount of hours in a week. If it was 183, that would be half of a year, right? So, all of these little things, I hope it's all starting to sort of connect. Okay? Now again, as I mentioned, these are all mathematical sequences. Okay? So this cycle right here can be multiplied by a certain number, and then that'll spin out even more important highs. Okay? So you can duplicate this by 2, whatever. Okay? You can get specific numbers, multiply it by those specific numbers, right? If there's any sort of important numbers that you might know, right? You can multiply it by those numbers and you'll get even more. important highs and important lows. Each lows will spin out new highs. New highs will spin out new lows. Okay? And all of these specific time cycles play into each other, marking out each and every important swing point that you can find. Okay? Now, again, this is just one way to do it. I show you multiple different ways to find exact times within your trading, no matter if you're trading intraday, swing trading, scalping, okay? No matter how you trade, I teach you exactly how to find, to the bar, major swing points inside of your trading. And once you unlock that, you start to trade with so much more confidence. And that could be the last thing that you need. And I can almost guarantee that swing timing is the last thing that you need. Okay? Now, if you're interested in learning that, again, that is very, very lucrative information. So you have to book a call to see if you're going to be a viable student for my DLS mentorship. Link is in the description. So now, how did I predetermine the price of this loan? Okay? Now, let me get up the tweet for you here. So as you can see right here, this is the tweet I posted. Okay? This was on November 20th at 5 p.m. my time. Okay? 5 p.m. my time is, I think, 11 a.m. or 12 a.m. Okay? EST. So, as I said here, see you at 81,500. Okay? Shorting any $4,000 pullback, we're printing you money right now. You can just see that in the charts yourself, okay? Just measure $4,000. So, how did I predetermine, again, this is all free on my Twitter, 81,500 as a pretty important price level for a reversal to take place? This is going to be extremely simple, okay? Again, I don't like overcomplicating my trading. I keep my trading as simple as possible. The more complex you have it, usually the less money you're going to make. Because remember, you do not get paid as a trader to spend more time on the charts. You do not get paid as a trader to make your strategy as complex as possible. No. You get paid as a trader for your patience and how flexible you are. Right? How on the ball you are. Are you able to shift your bias fast? If those are the two things you can do, you can be profitable very, very easily. Okay? Anyways, let's move on here, right? How did I call this $81,500 level? So let me draw this out, 81,500. Okay, this is around $500 from the low-ish, maybe like $700, right? $700 difference from the low. A little bit of spread, not the end of the world here. So, how did I do this? Okay, again, this is not some magic trick here. I'm not a market maker model. I'm not a market maker model. I'm not a market maker, okay? This is simple things that you can do in your own trading, okay? To take profits, to enter trades even, okay? Have a look. Right here, we have the 50% of this range, okay? So this is 50% of this range, okay? Again, remember, 50% of a range is extremely important. Premium discount of a range is extremely important. Now, we are focusing on the discount of the range. Premium, doesn't matter. We're always going to run into discount. Premium of this range, I don't care. Okay? Premium of the range, this is your sort of prime shorting opportunity because you know we're going to reach at least into discount at minimum, really. Okay. Now, as I mentioned, this is the price level I mentioned right here. 81,500. I know it's not exact, but it's close enough, right? What told me that 81,500 is going to be a major level? How's there no reversal is going to take place at this level? Let's go into this portion of price action right here. Okay? First thing that we sort of notice is that we have another dealing range from this low to this high, right? So this is a dealing range in itself. Okay? All the way down here we have dealing ranges inside of each other, inside of each other, inside of each other. Now, within the discount of this range, again, we have another dealing range. Okay? Here to here. Okay? And that sort of tops out all of our dealing ranges. I guess you could find 50% of this one, but not the end of the world. Right? Now, what you notice is that very close to 50% of this range, right here, lays an inversion fair value gap. Okay? Now, this SIBI will play a very crucial role for a very specific reason. Again, it's not the SIBI doing the work here. The SIBI has nothing to do with anything. What's truly doing the work is something on the slightly lower time frames. So let's drop down to the 12-hour here. So again, just double the amount of candles. Now what you'll notice is that laying right on this 50% is a SIBI. Then we see a retracement into the SIBI. We form an intermediate term high. Then we see leg down and then another leg higher. And we see a BISI form on the other side. Now, if you've watched me and you know how I trade, you know this right here is a unicorn model. This right here is a 10 out of 10 setup. These unicorn models are basically what's printing out most of your highs and lows on the price side. Okay, unless apart from like all-time highs, of course. Especially during retracements and stuff like that. When you go into the low time frame, you go look back. Okay, from where a retracement high or low got formed. Go look on those lower time frames and go see if there's a unicorn model to the left of that. Because I can guarantee you nearly every single time you're going to find a unicorn model at that breaker. Because every single high time frame order block is a low time frame unicorn model. Now as you can see, that's exactly where our retracement got formed. At exactly 50% of this low time frame range right here. Right? Basically exactly 50% of that range. To the dollar, we formed that low right there. And this is where we're seeing this little bounce right here. Okay? Now again, none of this is financial advice. You do what you do with this what you will. But I'm just saying, the time up here, the price down here. Okay? Time and price are both equal. You can convert time into price. You can convert price into time. Both of these things you can interchange here. Okay? Now, knowing all of these specific time cycles, as long as you can keep a track of them, just literally place vertical lines and label each vertical line high, low, high, low, high, low, high, low. You can find extremely important swings being formed on these levels, okay, at these specific times. And it's something that you see over and over and over again. And you cannot tell me it's not an algorithm controlling this. When you see these levels spin out over and over and over again at these specific times. Okay? And as I said, what I've just shared in this lecture is just scratching the tippity top of the iceberg. This is nothing that I share inside of my true DLS mentorship, right? Inside of there, I show you the real time and price source. I show you the real how to determine these highs and lows before time. Faster, quicker, on intraday charts, minute charts, second charts. It doesn't matter what you trade on. Okay? Because again, it's all mathematics. As long as you know what numbers to punch in, then you'll just know where the next highs and lows are formed. Next high, low, high, low, high, low, high, low. Okay? It's that simple, guys. So, I really hope you enjoyed this lecture and took a lot of notes. I honestly highly recommend rewatching this lecture because there's probably more that you sort of missed. However, again, if you want to learn more and you want to truly learn how to time these markets, you can book a call for an interview to my DLS mentorship inside of the description below. So, I hope to see you in there, and I'll see you next time. Bye-bye.